This is Bitcoin. 3 weeks ago, price dropped hard. Every retail trader panicked, but one level held perfectly. And this is gold. Different market, different move, same thing happened. This is Euro USD, Forex, completely different word. Same level held again. That level was POC every single time. This is not a coincidence. This is institutional gravity. And today I'm going to prove it to you live on 3 different markets. Hello everyone, my name is Marjan and I've been trading for 8 years. Self-taught from zero. And for the last few years, every single trade I take is built around only one tool, which is volume profile. Not RSI, not MACD, not even trend lines, volume profile. Because it shows me where the real money is, where institutions entered and where price has no choice but to return. That level you just saw on those 3 charts, that's the POC, the point of control. Today I'm going to show you exactly why it works and how to trade with it. First of all, let's see why even POC works. Before we go to the charts, I want you to understand why this works. Because if you just memorize the pattern without understanding the reason, you'll never trust it when it matters the most. Here's the logic. The POC is the price level where the most volume was traded in a given range. That means more buyers and sellers agreed on that price than any other level. Now, think about this. Institutions don't trade like you and me. When a hedge fund wants to buy 5 million of Bitcoin, they cannot do it in just one click. They need to spread that order across days and sometimes weeks. So they leave unfinished business at the POC. When price moves away, they still have orders sitting there. And when price comes back, those orders get filled. That's what creates the reaction. This is not technical analysis. This is market mechanics. This is how money actually moves. All right, let's go to Bitcoin first. I'm on the daily chart and I've added volume profile fixed range. Selected the last 6 months. See this bar? The longest one on the entire profile. That's the POC. Now, let me show you what happened 3 weeks ago. Bitcoin was trading up here where retail traders were excited. Everyone was calling for $1,020, but look at where the POC was. Down here, a long way from where price was trading. The gap between price and POC, that's what I call institutional tension. The further price moves from the POC, the stronger the pullback. And then it happened. Price dropped fast, hard, right back to the POC. Retail traders call it a crash. I called it a retest because the POC told me exactly where price was going before it got there. Now gold. Gold is different from Bitcoin. It's slower, more institutional, moves are more deliberate, and same setup. Volume profile fixed range, last 6 months. Here's the POC on gold. Now, look at this move. Gold ran parabolic from here all the way up to this high. An extraordinary move. But every time it pulled back, where did it go? Right here, the POC. Not a random support level, not a trend line, the POC. And here's what's interesting about gold specifically. Because it's so heavily traded by central banks and large institutions, the POC reactions are incredibly clean, almost textbook. This is one of the reasons I love using volume profile on gold. The institutional footprint is massive and it shows. Now, Forex, Euro USD. This is where a lot of traders ask me, all right, does volume profile work on Forex? Because Forex volume is just tick volume, not real volume. Yes, the answer is yes. It still works. Here's why. Even though we're measuring tick volume, not actual dollar volume, the relative distribution is still accurate. Where the most ticks happened is still where the most institutional activity happened. Look at Euro USD daily. Same setup. Here's the POC for the last few months. Now, look at this move. Price broke out here. Strong bullish momentum. Retail traders were buying, then pulled back straight to the POC, bounced, then broke down below, came back up, retested the POC from below, and rejected. One level, two different reactions, both perfectly logical when you understand what the POC represents. Now, the part everyone wants. How do I actually trade with the POC? 3 scenarios. Each one requires a different approach. Scenario 1, price returning to the POC. This is the highest probability trade. Price is above or below the POC and moving back toward it. You wait. You don't chase, you let price come to the POC, and then you look for confirmation. A rejection candle, a delta flip, a small order block at the level. When you see the confirmation, that's your entry. Scenario 2, price bouncing off the POC. Price hits the POC and immediately reacts. This is faster and riskier. You need to be watching in real time. The moment you see a strong rejection candle with high volume, that's your signal. Stop loss goes just beyond the POC, and target is the next HVN or LVN. Now, scenario 3, price breaking through the POC. This is the one most traders get wrong. When price breaks through the POC with strong momentum and high volume, do not fight it. The POC has flipped. What was support becomes resistance. What was resistance becomes support. Wait for the retest and trade in the direction of the break. When to ignore the POC. Now, this is the part most volume profile courses never tell you. Sometimes you ignore the POC completely. 3 situations where the POC loses its power. 1, when there's a major news event, central bank decisions, CPI prints, NFP, these can override any technical level, including the POC. Don't hold a POC trade through major views. 2, when the POC is from a very old range, a POC from 2 years ago has less relevance than a POC from last month. Always prioritize recent POCs. 3, when price has already visited the POC multiple times. Every time price returns to the POC, It erodes the institutional orders sitting there. After 3 or 4 clean touches, the POC weakens. Look for the next significant level instead. Here's what I want you to do right now. Open TradingView, pull up any chart you trade, Bitcoin, gold, Euro, USD, anything. Add volume profile fixed range, select the last few months, let's say 3 months, find the POC, draw a yellow horizontal line. Now scroll back in history and count how many times price returned to that level. I guarantee you'd be surprised. Then watch it going forward. Watch how price behaves every time it approaches that line. This is not magic. This is not a secret indicator. This is understanding how money moves. And once you see it, you cannot unsee it. In the next video, we go deep on HVN and LVN, how to find fast moves before they even happen. How to know exactly when price will accelerate and when it will slow down. That video is coming soon. Subscribe and turn on notifications and drop a comment below. Which market surprised you the most when you tested the POC? Bitcoin, gold, or Forex? I read every single comment. See you in the next video.